Hi, this is Abid Hussain Malik from Abid Financials. Welcome to our second video of study material QuickBooks Online Level 2, which section name is Expenses and Vendors. If you have not watched my previous video of section 1, please go to my channels and watch this video before starting this video. Okay, the other information is that only 8 questions shall be asked from this exam in your certification exam, and what topics are covered in this topic in this video. There are basically 3 main topics which shall be discussed. First one is charging billable expenses, second one is charging billable time, and third one is tracking vendor prepayments. So tracking vendor prepayments is similar like prepayments in our sales for customers. So these are very similar, and these are the 3 topics we need to discuss. Let's start our first topic today. First topic is charging billable expenses, why we charge, and first of all we know about the introductions and the need to use them. This feature enables the client to track the expenses they incur on the behalf of the customers, then include those expenses on the invoices. Explore the different options for doing things. So main purpose is that when you incur any expense on the behalf of vendors, and at the period and at the turn of invoice creation, at the time of creation, you add them in your invoice to charge your customers. So overview of the task: a construction client buy material for a renovation job, a legal client pay a fee for documentation, a consultant spend money traveling to their customers' places of work. All of these expenses that are often billed back to the customer. So basically here are the details of example of billable expenses which are normally paid by these person during that work. So basically these are example of billable expenses practically in our industries. Okay, clients with QuickBooks Online Plus and Advanced plans. So you should take in mind Plus and Advanced support the track billable expenses and add them to the invoices. Let's get an overview of these 3 tasks related to billable expenses that you shall dive into the details. These are 3 expense using billable expenses, adding a markup, and tracking as an income. So first we shall discuss using billable expense. First of all, we shall discuss its setting, how it should be switched on. Billable expense is a non-accounting expense. Clients can use them to track expense they plan to bill to a customer in future but have not yet included in an invoice. So track the billable expense, you need to enable the feature. Go to general setting and then account and setting, and from the expenses tab expand the bill and expenses. There are 2 settings need to be switched on here. This is account and setting and expenses and bill and expenses, and these are 2 we need to discuss here. Track the expense and item by customers, this should be on, and make expenses and item billable, this should be on. So here we can also select markup with a default rate, billable expense and item as income, and charge sales tax. Okay, now how we shall create a billable expense. Now that billable expense setting are switched on, take a look at how it's appear. You shall hit the new button and then select the expense. While creating an expense, you will see these things: pay, payment account, payment date, and locations. This is your job expense, and you will see here Then open a new expense, enter the detail, payment, payment date, and payment method. If you want to record an expense using a category, select the category from drop down. This is talking about this one. If expense is going to be marked billable, be sure to only use expense, other expense or other current liabilities, other current assets and other assets, fixed asset or cost of goods sold account type. So these should be used for billable expenses. You should keep in mind these things. Expenses, other expenses, other current assets, you can say these are very important to need to be selected. Now fill in description, the amount, check the box in the billable. It's talking about these boxes, and choose the customer to be billed. This is where you specify the customer, sub-customer, project, or to bill the expense against one. If you want to record an expenses using item, move on to the item detail section. In the product column, choose the item. Next, enter the quantity and check the billable expenses. And in the project, choose the customer again. Finally, save, and each line is separated billable charge. QuickBooks has created two billable expenses charged and one expense from submitted. Accounting transaction will credit accounts payable if it's a bill, or a payment account if it's a check, or expense transaction. It will then debit the general ledger specified on the category. And so it's talking about the journal entry about this one on the category details line, and cost account mapped to the product and services on the item deadline. To invoice the billable expense, create a new invoice. Select the customers on the right side of the screen. Charges are listed and can be added to the invoice. Now we shall discuss second option, that is adding markup. First of all, we need to enable the setting. In the expenses, this is markup, as we have discussed there. This is percentage. Now we shall discuss in details. Go back to setting, account setting, expense, billable expense, mark with default rate. Markup is recorded separate account in a separate account called markup account. QuickBooks automatically set up a default markup income account when a billable expense with a markup is first invoiced. If you want to change where markup is recorded, go to settings, select the advanced tab, chart of accounts, and desired account from markup account should be selected. Now the markup settings are enabled. Take a look how this appears on the expense transaction. Open a new expense, enter the details of your payment account, payment date, method. If you're using the categories to record the expenses, start to populate detail of the transaction under the category details. When you check the billable expense percentage you enter earlier in the markup, you can overtype it. Okay, and if you want to charge a different percentage markup in this instance, it means you can edit these percentages. Okay, if you are using item to record an expense, fill the item detail, check the billable box. This is the same, like this is the difference between cost and sale price in the item setup converted to a percentages. So basically, if your item, when you set up an item, so you have, for example, you purchase an item for $10 and sale for the $20 or $15, so the difference of $5 is converted as a percentage. So it's talking about difference should be converted into percentages. So this is like when you select the expenses, legal and professional expenses, some 500, 25%. And when you're entering item details, so you may see that rocks 50 quantity, this is rate, amount, and need to select billable, and markup is automatically selected here. So you can override to change. This can be override. Once you assign the expenses to customers and select the save, an option to view the detail of non-accounting transaction when recorded showing in the billable expenses. Now we should discuss invoicing markup billable expenses. Let's look at an invoice with a markup billable expenses. Open an invoice, enter the customer details, and select the billable expense. As you know, QuickBooks adds the markup on a separate line. And select PDF view to what customer sees what is full amount of expense with the markup included, but not markup itself. Select the save and hit button. It means that amount of expenses with markup, when we send to our vendors, it would be the total amount. It would not show the separate amount of markup itself. From the bottom of the screen, select more action and then transaction journal. So here you will see when we have recorded the transactions and we open that transactions here in the report. Here we shall see in our journal it will show the separate line of markup along with our transactions, but when we send to the vendors it would not show this separately. So here two transactions are recorded. One was the item and the other was the legal and professional expenses. So it's showing markup here 25% and 40% markup here. Markup has been recorded in its own separate account called markup, and unless account has been changed, so previously walked through. Track as billable expense as income. This is third point of our overview task. In the tracking the expense as income, clients want to record all income including expensive reimbursement from customers can be recorded to an income account without affecting the expense account. So need to switch on our settings here. Track billable expenses and item as an income, so it may be recorded in single or multiple accounts here. So we discuss all these settings in details. First of all, we need to open this setting by following this path, and then in a single account or multiple account option you choose multiple account. You would have to edit each general ledger account that would be used for billable expense. It is converted in a moment. Let's save. Final step, choosing a single account is to specify the bill and billable expense income. To do this, we need to switch on setting, advanced tab, chart of accounts, billable expense income account. To change it, select another account from billable expenses income account drop down. If you select in multiple accounts option, this create a checkbox called use for billable expenses in an account edit screen in chart of accounts. Any general ledger account that could be used for billable expenses must have an income account setup. If it is not there will be an error when trying to save that billable expense. When to track billable expense as income, so when we need to record these one, there are times when a client will use an income to reflect reimbursement of expenses and income to show the total amount of expenses. They may reference them both as a part of checks and balance process to ensure the expense account. It should be zero once it billed to the customers. Billable expenses are not always treated as the same way as regular income in every state. So tracking expense as income can allow client to reflect the total income balance appropriately. So this is very important. It is every state does not allow to record as income. So this topic is ended, and there is some practice questions here. Your clients want to invoice the customer for a fuel expense they incurred on a part of job. Recording this expense and category details line specify the client fuel expense account. They mark the expense as billable and enter the customer name. How will QuickBooks record the expense? Correct answer is transaction will credit accounts payable, debit fuel expense, and create a billable expenses. So I would like to introduce myself. I am Abid Hussain Malik, a CPA, top rated plus freelancer on Upwork. I provide QuickBooks and zero trainings. I have 10 years of accounting, bookkeeping, taxation, audit experience with over 300 clients. And I have provided services to USA, UK, Canada, Australia. If you have any question, you may contact me at my email address info@abidfinancials.com, or if you have any urgency, you may contact me at my WhatsApp number. I shall reply you as soon as possible. Besides this, I provide bookkeeping, accounting, payroll, and taxation services to my worldwide clients. I also provide these certification services level 1, 2, payroll, desktop, enterprise, and bookkeepers. I also deal with zero by the certification. If you need any of among services, you may contact me at my WhatsApp number. Now we shall discuss our lesson 2, charging billable time. So when you are working on the you have hire any labor, and that labor charges need to be charged to your clients. So this is for accounting of that billable time. Clients often need to be able to track time spent by a team on job, then invoice their customer. Explore how do this basic time tracking in essential plus and advanced plans. A design agency making update to a customer website, an auto repair shop for a mechanic time working on an engine. So these are like you may say the example who can use these billable time. So there are 3 examples who can use the billable time for their businesses. These are just few examples when a client would like to know how much labor cost is allocated to a particular job. Once basic time tracking is activated, clients can enter an added time spent by team. Data can be used to invoice customers and run reports. Usually it's the person overseeing the job rather than the team member who incurs the time, who record the time in the QuickBooks. There are 3 options here we need to discuss in overview tasks. The first one is tracking billable time, invoicing billable time, and reporting billable time. So first of all, we discuss QuickBooks time. What is time features and how we shall use them? This is available in Essential Plus and Advanced plans. Clients and their team member can enter using QuickBooks Time, and which is an add-on app that integrate into QuickBooks Online. It's great connected way to manage multiple timesheet, approve the time. QuickBooks Time has 2 plans: Premium and Elite. Premium and Elite. Elite is also for geofencing. Elite version allows for geofencing, mileage tracking, project tracking, and other benefit. Both plans come with a workforce app which allows the employees and contractor to track their time and go. The tracking billable time, how we shall track them. The first task is to set up a basic time tracking, and go to the general setting, accountant setting, and then time tab, and there are 4 settings to review. Here we shall see the setting general and timesheet. The general, first day of the work, and the show service field, and allow time to be billable, and show billing rate to user. So invoicing billable time. Next task of billable time is invoicing. That's how we shall do this one. Open new invoice, enter the customer and date. From the side panel, select the billable time you want to include on the invoice, and you can select time activity entry and edit it before adding to the invoice. So this can be added and edit before the invoice. Note that income from invoice is recorded based on the sales count configured on the service item. If a service item was not specified when billable time was recorded, QuickBooks uses its default or service item. So this is the main difference. If you have selected, then it will be entered in a selected account, or otherwise it will be charged as a default account. When transaction has been added to invoice, you can change its details including income account, changing services item, overrides description, quantity, tax rate, but transaction stays linked to time tracking entry. So this is very important. When you are ready, select review and send. Reporting on billable time. You have reached the final task. To review the track time, you can run the 5 default report for these purposes. The easiest way to find 4 of them is to enter the word time in search box in the report centers. So unbillable time, this is the first one report. Unbilled time report shows the time activities that has not been invoiced yet. So this is unbilled time. This is your line name, date, and the employee, custom design, description, rate, duration, and so second one is the recent edited time activities. These reports show the time activities recently entered or edited. This report is a quick and easy place to check whether time has been entered correctly, whether it's been set as default to a particular client. So these are dates, customer, employees, and description, and rates, and billable. So these can be viewed. Time activities by employee details. Time activities shows the for each team members including hourly rate and duration, and whether the time is billable or not. So here we can see employee wise all entry of the time here, their time and billable and amounts and the rates is here. Time activity by customer details. So shows the time activities have been provided to each customers and whether it is time billable or not. So here we can track our time by customers. So unbilled charges also shows up on the unbilled charge report. So this is a time which is not billed yet, so the report here. So we discussed the 2 questions about this one. Where can you adjust the billing rate when invoicing a client for billable time? So in the time activity entry and directly in the invoice you may edit the time. Which report is the best choice if you want to check time has been entered correctly or whether it's been set as billable to a particular client? So the correct answer is recent edited time activities report. So now we are going to discuss our third and the last one topic of tracking vendor prepayments. So it's similar like our customers prepayments, and there in the customer we receive the custom payments from the customers and Here we pay our advance payment to our vendors. So clients often need to pay deposit or make payment to the vendor before receiving the goods, and they do. There needs to be well-defined workflow to keep book accurate. Overview: an interior decorator makes a purchase prepayment for a furniture of the customers. A construction company pays a deposit to one of their large subcontractor. In this example, the client is making a prepayment from their side. It might be called a retainer or a deposit. You may call any of the name from a prepaid expense or something like similar. There are three names: retainer, deposit, and prepaid expenses. In this course, they are called the prepayments here, and that's the money paid to in advance of the services being performed or goods being purchased. So this is main definition about. So now we shall discuss overview of these prepayments recording. There are four methods: deciding which method, using accounts payable, using other current assets, and reconciling and running report. Basically, these are two methods to record. So this is a topic of deciding, decision making, and these are two methods, and the fourth one is running the reports. Okay, now we shall discuss how we shall decide which method to use. Enter vendor prepayments in QuickBooks. You can either record them to accounts payable or an other account asset. Using accounts payable, you can track vendors' prepayments by entering a bill and coding it to account payable. This produces a credit on the vendor's accounts, thus decrease the amounts they owed. And later you can apply this to a bill. So when you record the prepayments, you should make a journal entry at the year end to reclassify the debit balance for prepayment from account payable to prepaid expense. So this is very important. You need to create a journal entry at the year end in this method. Enter reversing journal entry on the first day of new year. So this is again very important. You need to first of all classify your outstanding balance into your prepayment and then reverse it. Instead of creating a journal entry for multiple vendors that have negative accounts payable, you may want to set up a vendor called accounts payable adjustment and use that on the journal entry and reversing the entry. That's a very easy and quick way. Note, this method does not conform with the generally accepted accounting principles. So it does not use a vendor prepayments asset account. So this is a main reason it's not acceptable by GAAP. So other method is current asset method. Track the prepayment by entering an expense or check, creating a bill and recording it to current asset account, usually called vendor prepayment. So you can increase the balance until you are ready to pay the final bill. The bill will later be entered for full amount of the goods and services, but will add a line for the amount of prepayment. This will offset the same account used in the first transaction and so reduce the total bill due, showing only the final amount needing to be paid. So this is the main difference here. You shall record as your other current asset and for prepayments, and whenever you receive the goods and you will create the bill, You will enter the all detail of your goods received, and at the end you will select prepayment account. That previous amount would be the positive and this prepayment would be as a negative, and you will see only net amount here which needs to be paid. The right method we need to select. When determining which method to use, to consider the following things which shall help to identify which method is suitable. Whether financial statements are needed for investor, how often make vendor prepayments, how much prepayments are, how much time will pass between making payments and working, total value of combined prepayments at the year end. Accounts payable option may be acceptable if your client chooses reports for management. So this is suitable method, and or when the total amount of the prepayment is not a material amount. You can see that these are two suitable. Accounts payable is suitable for these two purposes. Okay, we can just highlight them as this method is best when clients only make vendor prepayments occasionally. Clients can also use this method if there's a short time between vendors prepayments and the delivery of the goods and the services, else other current asset method is likely to be the best fit for this one. Okay, and now we shall discuss how it would work. Here we are discussing when it is suitable, and this method is best when we are discussing about other current method. Is best when a client we also do this one occasionally, and the client can also use the method if there is a short time between vendors prepayments and the delivery of the goods of the services. So these are the best way. Here we can do this one. Okay, now we shall discuss here the process of recording. Let's move on to look at one method of tracking vendor prepayments and explore how to record them to accounts payable. They decrease the balance, and then balance is applied later when the bill arrives for the goods and services. So here we shall discuss all the sequence for accounts payable, and then we shall also use for this this method process of recording. Okay, let's move to look the method for tracking vendors prepayments and explore how to record them. First, you need to consider switching on automatically apply the bill payment setting. To locate it, go to setting and advanced tab and automation. You shall see the setting here. Switching it on streamline process of tracking vendor prepayment using accounts payable method, but it affects both accounts payable and accounts receivable workflow. So you may want to switch it off or manually apply the payments as a part of tracking vendor prepayments. Instead, it may depend upon you. Now you can record vendor prepayments to accounts payable. Let's enter prepayments by creating a new check and select the category and the detail and select accounts payable. Let's create a negative payable balance, and when you're done, select save. Create a new bill when bill arrive. but only if product or receive or services performed. Clients often mistakenly enter the bill too soon, which causes issues especially with inventory since items have not been received yet. So it should be only recorded when these are received. Then in the amount column, enter the total amount of the bill. When you are done, select save and close. Now that both prepayment and bill have been entered, in the unpaid bill report you shall see the negative amount of prepayments here. The positive amount of the bill of the full amount owing to vendor is total net amount of the two. Now it's time to pay vendor. Now that if you have switched on the automatically apply bill payment, this step is not needed. To apply the prepayment to bill, create a new pay bill. Select payment account and select the box of the bill to pay. When you check the bill, credit will be applied automatically. Payment has been switched on the account and setting. QuickBooks fills in total amount of credit in credit applied column and reminder of the bill in the payment column. You can apply all of some of this deposit against the bill. If you are not fully applying credit, change it to the appropriate account. If you are applying the credit but not paying the remainder of the bill, clear the payment amount when you are done. Bill is now marked as paid, and both prepayments and the bill no longer appear on the unpaid bills report and instead appear on the bills and applied payment report. Now we shall discuss our process of using other account asset method. How we shall record them. Start by creating another current account by going to the chart of accounts, select new, and then whether prepayments is a good option, select other account asset as a type and detail type and save. You can add check or expense to vendor for the prepayments and then enter the prepayment amount on the bill and arrives. Create a new check, upload from the pay bank account and payment date. Category select and vendor prepayment account, and you may also give the description as a prepayment and save and close. When goods have been delivered and total bill arrives, create a new bill, upload bill with vendors, bill date, amount, bill number, and then select the category box. Vendor prepayments account shall be selected and the amount. Enter the amount recorded in the previous step as a negative value, posting to the vendor prepayment account. To add a note in a description. So create an item in category details and enter the amount of bill. Books automatically detect the prepayments and only shows the net amount or save and close. So you can pay the bill in the usual way and the amount outstanding will be the total amount of bill minus prepayment account. How to reconcile these reports, and clients can run a report to view an existing prepayments in a QuickBooks, and it involves the first reconciling account used for vendor payment, then using a filter in the report. Before running report, reconcile other account and to which the vendor prepayment transactions are recorded. This account should be reconciled at least once per month to clear out any prepayment that have been applied. Once per month at least we should see this one. When reconciling account, enter its ending balance to the zero, and regardless its actual balance in the account would not be marked as reconciled until it is fully used up and the transaction have set up. Using zero here enables you to track ins out. So this is very important. This is the purpose of recording this one. If a client has a large amount posted to a vendor prepayment account but pays in small installment, transaction would not clear until prepayment is fully applied. Client can clear the bill against installment. Running the filter report to how we shall run these reports. To track, open a vendor prepayments, run a transaction details report for vendor prepayment account and customize it. Open a balance sheet, look for vendor prepayments and select the balance on the vendor prepayments account to open the detailed report. Customize the report by changing the report period, all date, group by and vendors, and then columns. Adjust by adding and removing, recording them as necessary. From the filter option, you can add another filter, cleared. Select as cleared and choose uncleared in the drop down, and change the report title to the vendor payments to over typing existing title. Save the customization. Okay, run the report. At the moment it shows all prepayments, even those with zero balances, and these are more steps to make the report effective. To get report show, just open prepayment and reconcile vendor prepayment regularly. Beginning balance should be zero. Ending balance, enter zero regardless of the balance on the balance sheet for this account. Enter the reconciliation ending date and then select the starting date. Start reconciling. Mark any payment that have been fully used and as cleared. One will show in the payment column and other in the charge column. When all the fully used vendor prepayments are cleared, the difference is zero. Click finish. Because you customize the vendor prepayments report by adding a filter for unclear status, you run customized report, it will only show the open balances. Set to auto run. You can set a schedule to this report on a regular basis, so keep on top of vendor prepayments. This is a one question for practice. When you record and track prepayment using another account asset, what happened to account balance when you enter the final bill? It would be adjusted, means decrease. It increase, decrease, zero out, remaining change, so it would be decrease out. So that's all for today. We have finished our second video about prepayments, expenses and vendors. Or if you have any question, you may let me know at comment section. I shall reply you as soon as possible, and